A trading venue which operates a central order book decides what order types can be applied. Most trading venues allow a wide variety of order types. In case of an electronic trading platform, the trading venue develops, operates, and maintains trading software. Over time, new features are implemented for the application of new order types. As a result, on electronic trading platforms, market participants can submit orders with different characteristics. Although orders can be quite complicated, there are some basic formats with standard instructions. In any case, an order has to contain information about the product. It has to be made clear to other market participants what product the instruction concerns. Clearly, this could deal with, for instance, the US dollar versus euro exchange rate, company shares of Microsoft, Google, or Amazon, or a commodity like crude oil, coal, or natural gas. Next, it should be made clear whether it addresses, for instance, a term contract, an option, or a swap. Furthermore, it also needs to include specifics, even more in case of commodities, such as when and where to deliver, as well as what exact quality. These details are stated in the contract specifications, which altogether define the product. Besides the product description, an order also has to include information about the volume and price. Obviously, the volume concerns the quantity or the amount of units, whereas the price is stated per unit.